No matter your age, your plan for retirement can start today. From the News Channel 5 Network, this is the Retirement Report.
Good morning. Welcome to the Retirement Report. I'm Hank Parrott, your host. You know, there's a lot going on in the markets this past week, and for this year, for that matter. There's been a tremendous amount of volatility, and we're going to look to talk about that a bit today and put it in perspective, and also to talk about what it means when it comes to retirement planning and, of course, your investment portfolio. How are you invested currently? What type of asset allocation model do you have in your portfolio? And here's something I guess I should ask. Do you have an asset allocation model? You know, this is one of those things that maybe we get a little, as you look at, well, I'll put it this way. As new people come in to see me each week, one of the things that I notice is that sometimes they just really don't have an investment plan. What they have is a lot of maybe investments. They might have different mutual funds or even individual stocks and bonds, but in that portfolio there's not really an asset allocation model that they're seeking. What we find, in fact, is that they're just kind of accumulated some things over time, and there's not really a plan to it or a strategy to it. And this is one of the things, again, we have 60 years, think of that, 60 years of Nobel Prize winning academic research that shows us how to construct a portfolio, how to in fact get the desired returns that we're seeking relative to the market return, okay, but while reducing the risk or volatility. And in a time like this is a very big deal, right? So think about when we look at the markets, we see a 5% drop in one day. How did your portfolio do? Did you lose 5%? Did you lose more? Maybe 7%, 8%, 9%, whatever, right? Or did you lose a lot less? Did you have a lot of bonds in there that maybe helped to modify that a bit? And did it work? All right, a good asset allocation model, an example would be on our portfolios that I used in our office. Depending on that amount of bonds to the stock piece, we saw drops even where, I'll give you an example, a portfolio that 85% stocks, 15% bonds, that had, with a proper asset allocation modeling, these model portfolios using the research that I mentioned to construct these, in that same period dropped about half that, okay? So we dropped about 2 to 2.5% when the market dropped 5%. But here's the other part. Over the last 10 years, it's still averaged the same return as the market. So if you can get that return but reduce your risk and volatility, that's going to make it a lot easier. You're going to end up coming out a lot better, in particular when we head into a bear market. This is one of the things that will help protect you. It's a defensive strategy to protect you so that you're not going to take as big a hit. And the next piece is they recover. This strategy also works in the sense of recovering faster. In the last 2 bear markets, not only were we able to reduce losses, but we were able also to recover in less than half the time that it took the market to recover. And again, when you're taking money from your retirement accounts, this is going to be critical. It's called sequence of return risk. This can be the difference between running out of money and having all the money you need to maintain your standard of living and quality of life no matter how long you live. So it's so critical to make sure that your asset allocation models, that you have one, and it's the correct one, all right? And it's built around getting you the needed rate of return, okay, to again accomplish those goals. The first one being we at least want to maintain our standard of living, and sometimes we may want to attain a higher standard of living, have some additional fund money, in other words, and have that increased quality of life throughout our retirement years. And of course the biggest fear, and this is crazy in some ways, right? Because sometimes this is put ahead of death. It's that running out of money, being broke, being a bag lady or a homeless person on the streets, because we don't have the money, because we're going to be stuck maybe just living on Social Security, and that's going to be so much harder on us, right? So if you want to protect yourself and protect your investments and maintain that standard of living and quality of life and increase it, in fact, then pay attention, because when we're talking about this asset allocation model. Now, first thing I want to show you is some historical perspective here. So one of the things is to put this in context. First off, I don't think we're heading into another bear market right now. The economy is just in too good a shape. There are too many good things going on out there with regard to GDP, with regard to unemployment, with regard to jobs, jobs, that part, wages are up. So there are a lot of really positive things in the economy. Don't see that happening. Now, having said that, I don't have a crystal ball. I can't see the future. I don't know that some unforeseen thing may happen that could in fact create problems. You've heard talk about the Federal Reserve. You've heard talk with the president going back saying they're being too aggressive with these rate increases. And certainly that's having a dampening effect on the markets. So there's part of it. Now earnings season is upon us, and there's another. In fact, last night the tech sector, I think Amazon and Google in particular, disappointed. They didn't hit the earnings targets that the analysts had projected, and therefore we're seeing now today probably another down day in the market. So we had, and if you look at how volatile, right? So Wednesday we got a 600-point drop. Thursday we get a 400% increase, and now today we're, last I looked, I think we were the futures were down somewhere around 200 to 300 points for the looking towards the open. So we're in for another rocky day, it appears. But having said that, if you look at the volatility we had at the first part of the year and the volatility we're having now, even though these big swings, all right, of 1, 2, even 3% in a day in both directions gets us all very nervous in a lot of ways, right? And what does it mean? Well, here's something to keep in mind. In the scheme of things, over the course of the year to date, this year, we're basically about flat. We've been ranging between a 1% negative, just 1%, and a 1% positive for the whole year. Okay? Now, to put that in context, we're in the longest bull market in history. Okay? We've averaged almost 12% a year over the last 10 years. And having said that, let's keep in mind that in that 12-year period in 2011, it was basically a 0 year. In 2015, another 0 year, and yet we still maintain a 12% average. So maybe we'll have a 0% year this year. Maybe we'll get a rally and we'll end up some positive, but it doesn't look like it's going to be a double-digit year like last year where we had a 20% increase. So, but keep these in perspective. We're long-term investors. This is for the long haul, but it is a great time. This is a time when everybody's paying attention, right? So this is a great time to have an analysis done of your current investment portfolio to make sure, in fact, if and when we do, it's not if, but when we go into that next bear market, that you're going to be positioned to be able to withstand that, and it's not going to set you back with regard to your retirement goals. Okay? So, in fact, I'm going to make it easy. For the first 10 callers to my office this morning, the number is 615-376-5325. Tess is standing by to get your information. She'll send you out a packet of things that you'll need to bring to your appointment with me, and we will do an investment analysis as one part of a comprehensive financial plan at no cost. This is something that I typically charge $500 to $5,000 for. Okay, just to do up a plan for someone. For the first 10 callers, you can get this at no charge. Now, here's what it amounts to. When you come in, we're going to talk about things like tax planning, which we're going to get into a lot today as well, tax tips for 2018. We're going to talk about your investment portfolio, do an analysis of it. We'll be able to show you what the average returns have been over the last 1, 3, 5, 10 years using Morningstar research. And with that, we'll also be able to show you the volatility index with regard to your portfolio so that we can show you what will happen in the next bear market based on the last two with your current portfolio. What you would see, would you drop as much as the market, more than the market, less? What would it look like? We'll be able to show you that and be able to show you your financial future based on the things you're doing today and how to improve that. And we get into all kinds of things. We can talk about Social Security and Medicare and taxes, again, taxes on Social Security, how to minimize your taxes, keep more money in your pocket. All of that we cover in this, and including estate planning if you need some help there. We can talk to the difference between wills and trusts, the importance of powers of attorney, all of that covered in this comprehensive plan. So again, first 10 callers, 615-376-5325. Tess is standing by. She'll get your information, send you out a little checklist of things to bring to your appointment with me. And again, whether that's 1 visit, 2 visits, it's not just a simple consultation and answer a few questions and send you on your way. We're going to do a comprehensive plan, something you can truly use to make sure, again, that you can attain and maintain your standard of living quality of life no matter how long you live. All right, first 10 callers, 615-376-5325, and I look forward to seeing you. Okay, we're going to take a break. When we come back, we're going to get into, I've got a special guest with us today, Dr. Friday, with Dr. Friday's Tax and Financial Services over in Brentwood. I've known Dr. Friday now for, she she hates to admit this, but it's been 20 years, right? And she's a great help to my clients and to me. She does my taxes for both my company, for me personally, payroll, all of that. And she's a great help. If you do have problems with the IRS, she can help you there too. So again, we got that and more. We're going to get into more about investing, more about the markets, and also about taxes and how all this tax-efficient investing, by the way, is one of the things we'll talk about as well. So much to cover. But first, a quick break. Join us here. We'll be right back on the Retirement Report.